Hi guys, today we're going to be taking a look at the technical analysis on Vechain's VET token. So here we have VET paired up with USDT. We're on the one-day Binance chart. And as I get into this, smash that like button, subscribe for more, and let's get started. So from our last technical analysis session last week, for Vechain, we were talking about this consolidation, this range that we seem to be bound in. We were running the idea that maybe this was some kind of Elliott Wave triangle, and well, we still find ourselves getting pinched into this apex. This gives us the idea that maybe we might be looking for that next breakout to the upside pretty soon. Now, obviously, with an A wave structure here containing the 5 waves, the B wave being a potential triangle, it means that this C wave could get pretty explosive. We are targeting on the kind of short term, 3.529 to 3.957. That's your typical kind of range. But if it does explode beyond that, then that puts us into a rather impulsive in terms of how the buyers and the sellers are participating in the market, and basically means that we're trending quite aggressively to the upside. So let's go ahead and take a look at some of the indicators that can help us understand this particular moment here. Now, on this daily time frame, we can see that the stochastic RSI is correcting quite nicely. I don't think that this is done just yet though, right? I think there's going to be more downside here and the potential fake out before we get into the bigger move to the upside. Now, it's possible for us to correct down quite aggressively, but it's no guarantee. We could in fact lose the existing low coming in at 2.17 cents. But again, there are no guarantees. Now, if we start thinking about triangles, how do they kind of map out? Well, we have 3 waves coming down. We have 3 waves coming up. Okay, we then have 3 waves coming down, we have 3 waves going up, and we are inside an E wave. This means that we need 3 waves to finish it off, and E waves can be pretty unpredictable, which means they can come all the way down like this, or they can be as shallow as it is right now. In a neat example, it would just finish here and we'd get a breakout to the upside. But E waves, as I said, are unpredictable, so we have to be quite cautious with where it goes. But after an E wave, it gets pretty explosive afterwards, and we will be looking for a good old launch to the upside. Okay, so that's kind of what the theory is at this stage. Now, the stochastic RSI is correcting, but it means that there's still more room to the downside. So watch that E wave. Now, the divergence indicator hasn't got any major concerns. We're in bearish territory for sure. We're lower than 50. We're pretty close to the 50 level, which means basically we have the ability to turn this into bullish momentum pretty soon. So 48.63 is currently where we sit. Anything above 50 is bullish. Anything lower than 50 is bearish. So we're in bearish territory, but there's a slight tilt to the upside, and that could turn us and push us into bullish momentum territory. Turn off the divergence indicator, throw on the MACD histogram. I don't like the actual average lines, but the histogram gives us a visual representation of what's going on in the market. Now, what do we see here? Well, we can see weakness within basically the buying and within the selling. So let me show you, right? We obviously have the price action pinching down, or at least pinching down, as we see here with the A, B, C, D, E structure, right? But we can also see that we have a very similar thing going on when it comes to the MACD histograms. Basically, the market doesn't know whether it should be buying, doesn't know whether it should be selling, and it's just kind of like toying with itself. But I suspect something big is about to happen. Now, that might be the FOMC interest rate decisions over in the US. It could be something very different. I don't know, right? Fundamentally, I don't know what it is going to be. But what I do know is that the technicals are telling me that something big is brewing. Inside of this pinched out area with momentum coiling up, something is going to happen. We're either going to get that explosive E wave go down lower than we expected, or it's going to have a massive breakout to that 3.5 cent area that we're talking about. So it's going to be an interesting week for Vechain. So all eyes should be on this price action, in my humble opinion. Now, what we're going to do is we're going to throw in the accumulation and distribution line. This is something that I like to look at from time to time because it shows me how the market participants are acting. And well, what does that look like to you guys? This shows me that Vechain has been on an accumulative journey since 2023. During 2024, it grew. It had a pretty boring year of 2024 until it got towards the end, right? October, November of 2024, huge accumulation occurs. And then it kind of cools off a little bit and is going sideways. Well, we're entering the same period of time where we can see the potential for more accumulation happening at the end and in Q4 of 2025. Historically, that's when we've seen great growth. Here, in this low side, this is October of 2023. Over here, this is October of 2024. And we're just a few weeks away from October 2025. Does that trend continue? I suspect it will. So our accumulation line is really, really interesting. And every single time we've seen accumulation, we've seen a significant uptick with the price action. Both occasions, right? So as we reflect on that, what do we see? Well, we can see a giant ABC structure out towards 8 cents. We have a corrective journey here, and we're just plotting out the first ABC pattern here. Now, it's possible that this turns into a very impulsive breakout, and we do something similar to what we saw in November of 2024, or even when we saw this really good grind from October, November, December, January, and February into March of 2024, like this 2023 to 2024 5-wave structure. If we have something more like that, we could see steady growth here for Vechain. So just be aware that although we're tracking this little mini move at the moment, it's a part of a much, much bigger play that is playing out for Vechain. Now, our longer term aspirations for Vechain is somewhere between 32.95 cents and 77.35 cents. So that is what we're looking for, and it's going to be this higher range up here. Okay, now that is going to mean that we have to have a significant breakout to the upside. Will it be smooth sailing? I don't suspect it's going to be, but it is going to be opportunity in what we see going on when it comes to this price action. So mapping out that kind of low move right now, how the price reacts at around 3.5 cents is going to be critical in how we look at that bigger picture for Vechain. Let's roll this into the weekly time frame and discuss what those targets kind of look like. Because at the moment, we can see the small targets at around 3.5 cents towards 4 cents. And then we have this little medium target between 9.5 and 12.6 cents. Now, this is going to be a key area that we have to push past. It's a key area of previous resistance that I think is going to be a bit of a battleground. But do I think the price action is going to stay there for too long or get rejected there for too long? I don't think so. I think as this market heats up, as we get into really big bullish moves for altcoins, I think the narratives around what Vechain is and what Vechain has been doing, not just, you know, from the early 2017s through to 2021, but more recently, you know, 2022, 2023, 24, and 25. Where that focus from, you know, supply chain authenticity into eco-friendliness and basically rewarding good deeds is also going to present itself within the chart. So I think we're going to find rejection at around this area initially, 9.5 to 12.6 cents, but I don't think it's going to be long-lived. Now, one of the things I'm really interested to see is how this kind of plays out longer term, right? What kind of structure are we going to actually be seeing here when it comes to the price action, right? Is it going to be a kind of 3-wave corrective pattern, something like this, where we can see that we kind of tap out around this upper area and then cool off before rallying again? Or is it going to be actually more impulsive in the way that it moves and tracks a more diagonal based pattern? If that was the case, then this 9 to 12 cent range, we're going to just blast through it, then cool off, then push back up again. Okay, and the reasoning for that would be the structures that would fall within it. Okay, wave 3s typically have to be 1.618. And I use the word typical because there are just a handful of structures where it doesn't have to be. But for the most part, it should always be 1.618 times wave 1. So unless we get some kind of diagonal pattern, let's say contracting diagonal based pattern, where you do something like this, where the only rule for wave 3 is that it can't be the shortest wave, well, yeah, sure, we're not going to necessarily hit our targets. But for the most part, that wave 3 should be higher in that particular space. Alternatively, of course, we end up with a series of corrective patterns, but still bullish in the longer term, which means we have 3-wave patterns over here. We maybe push up, we pull back, we push back up again. And then, like, you know, over time, what we do is we just see lots of these mini corrections, but we work our way up to that higher target range. Why this target range though? This target, is it just randomly drawn? No, it's not random at all. It actually relates to what happened back in 2020 and 2021. So for us to kind of see the growth that we did, which was 17,780%, to kind of cool off into 2022 into 2023, the aspiration is for the price action to at least have a new all-time high based on the very principles of Elliott Wave. Basically, we've corrected up, we've corrected down, we're looking for correction up. There's no guarantees, of course. In fact, under a C-wave pattern, it would be all the way up there. It wouldn't be a C wave pattern though, because actually I track this as a W wave up, an X wave down. So I'm actually looking for a Y wave. And that Y wave, really, it is just double top minimum expectations, and bullish expectations would put that way above $2. I don't suspect we're going to see $2. So I actually look at the Fibonacci levels and I have this kind of range between 33 and 77 cents, kind of where I think the most realistic targets are going to be when it comes to Vechain's VET token. So yeah, all in all, I'm still bullish on Vechain. Not a lot's really changed over the last kind of week or so since I last did the video. And for the most part, yeah, it's all kind of just playing out quite nicely. From those moves that we're tracking on the smaller time frame, from the little triangle pattern that we have right now to the little mini 3.5 to 4 cent range, all the way through to the 33 to 77 cent longer term targets. I think what we're going to do is we're going to see some pretty interesting times when it comes to 2026. Q1, Q2, I think are going to be massive, massive quarters for next year. So all eyes are on Vechain's price action. The question is, are you accumulating, or are you letting the opportunity slip you by? You can let me know in the comments down below, or join us in the free Discord server. But for now, I'm going to wrap it up there. So hopefully you found it useful and informative. If you did, smash the like button, subscribe for more, and I'll catch you all in the next one.